Hey everybody, today I've got a 5-part video breaking down Sonos stock and why I think it's one of the best growth stock opportunities today. If you're not familiar with Sonos, to put it simply, they're like the Apple or Tesla of home audio. They make premium, indoor and outdoor portable smart speakers, as well as products for a true home theater experience. Their dedicated app and proprietary software make everything easy to set up and fun to use. So in this first section, I'll be discussing Sonos' strong product ecosystem. A product ecosystem is defined as when a business offers complementary products that work well in tandem. It strongly encourages customers to make additional purchases, which Sonos CEO Patrick Spence has said is a key part of their business model. So here's a perfect example of this. In this set, we see 3 different products that work together to make a complete home audio surround sound system. It's composed of the Arc, their sound-assisted soundbar, 2 Sonos One speakers for surround sound, and the Sub for deep bass. Now let's watch this video to hear what CEO Patrick Spence has to say about their customers' purchasing habits.
Talk about new households, you got this IKEA partnership.
Yeah.
Is the emphasis on a new household formation or trying to get existing households to flip to new technology?
And this is the thing that I think is least understood about Sonos, which is 37% of our sales every year come from existing customers coming back and buying another Sonos, right? And you saw during the year, the average number of products in a home went from 2.8 to 2.9. So part of what we do with IKEA and why we introduce these new products is to get into more homes. But unlike anybody else in the industry, people don't replace our products, they actually add on to them year after year. And so really, we're trying to do both as we go through this. And we know once we're in somebody's home, they're probably going to come back and buy more.
So just to echo what Patrick Spence said, 37% of annual sales are credited to existing customers buying more product, with the average home carrying 2.9 Sonos products. These follow-on purchases indicate high customer engagement and satisfaction. It decreases the likelihood of competitive substitution and ultimately results in higher customer lifetime value. Let's take a look at the company's S1. If we focus on the pie chart to the left, it shows the percentage of customers based on how many Sonos products they've purchased. And as of March 31st, 2018, 61% out of 7 million households purchased more than one Sonos product. For the graph on the right, customers who bought one product initially ended up adding 1.4 products over the course of 4 years. And for customers who initially bought 2.9 products, they ended up adding 2 products at the end of year 4. So from this, we can assume that customers who early on decided that they want to buy into the Sonos ecosystem did exactly that. 4 years is a long time for customers to shop around, and it's assuring that they always come back to Sonos. Now, I just want to wrap up this section with a statistic mentioned by Patrick Spence. He said 93% of all Sonos products sold since 2005 are still active today. There aren't many products that last 15 years. Maybe a good pair of jeans, a trusty Swiss Army knife your dad gave you, but you generally don't think of a piece of technology lasting that long. 15 years ago, the iPhone wasn't even introduced, and yet 93% of Sonos products are still active. To me, that speaks volumes to their company culture of doing things for the long term, making great products that customers love, and being committed to a great customer experience. In this second section, I'm going to be discussing their IP portfolio. Some people might view Sonos as a hardware company, but in reality, more than half of the Sonos product development team is focused on software, not hardware. Through continued investment and staying true to their culture of innovation, Sonos has built the second largest IP portfolio within the consumer electronics category in the latest IEEE Patent Power Report, rivaled only by Apple. Sonos invented the ability for speakers to sync and play audio throughout your home back in the early 2000s. And you might say, well, this technology is used by Google and Amazon, which is exactly why Sonos has sued Google for allegedly infringing on 5 Sonos patents. They've sidelined going after Amazon for the time being to avoid litigation with 2 tech giants at the same time. Now, obviously this is a big risk as legal fees are costly and has undoubtedly hurt their relationship with Google for future partnerships. But there is a huge potential upside if Sonos comes out on top. Google would be forced to stop selling all infringing products unless they come to an agreement, which would likely include a form of patent licensing which would be a huge source of revenue for Sonos. In the event that Sonos beats Google, they'll likely go after Amazon, and should they come out victorious, investors will surely send the stock price even higher. It's important to note, Sonos previously sued Denon for patent infringement and won. Sonos did a complete refresh of their dedicated app, which allows you to set up and manage all your devices from your phone. One of the coolest parts of the app, and Sonos speakers in my opinion, is that you can fine-tune your Sonos speakers to your home using True Play. True Play measures how sound reflects off walls, furnishings, and other surfaces in a room, then fine-tunes your Sonos speaker to make sure it sounds great no matter where you've placed it. In part 3 of this video, we're going to be taking a look at Sonos' valuation. If you guys are enjoying the video so far, please consider subscribing, hitting the thumbs up button, and if we could get my first video to 10 likes, I'd really appreciate it. Alright, back to the video. So jumping right into it, we're going to take a look at a report made by Citron Research, which actually made the stock price jump 9% the day after it was released. So this section states, while Sonos has consistent revenue growth and profitability similar to multi-product companies like Apple and Garmin, the company is trading in line with much weaker and more volatile single-product companies like GoPro and Fitbit. How can a company whose products are sold out across the board be given the same multiple as out-of-favor hardware companies? Fitbit and GoPro are single-product companies that are not growing and not beneficiaries of recent trends. There's no reason for Sonos' multiple to be less than 1x sales instead of more in line with multi-product company peer Garmin at greater than 4x sales. However, in my opinion, it's always better to underestimate than overestimate. And we can see here that Beats was acquired by Apple for a 2.5 multiple. Now, if we look towards the bottom of the page, we can see how the stock price fluctuates based off of the multiple. Here it goes from 2 to 6. Now, using our 2.5 multiple, we'd arrive at a share price of roughly $32.50. At the time of recording, the current share price of Sonos stock is $16, which would represent a 100% upside. So, given Sonos' low valuation, it makes it an extremely attractive acquisition target, which brings us to our next section. In part 4 of this video, I'm going to be discussing the possible acquisition by Apple. I think Sonos has a lot of things going for it that make it a very strong target for Apple, who've just reported that they have $193 billion in cash this quarter. Here's what TechCrunch had to say about the alignment of the two companies. Both are clearly focused on delivering premium hardware at a price point that's generally at the higher end of the mass market, and both use services to augment and complement the appeal of their hardware. Sonos, like Apple, clearly has a strong focus and deep investment in industrial design, and puts a lot of effort into a truly distinctive product look and feel that stands out from the crowd. Given the launch of the HomePod, we can see that Apple wants to go after the portable speaker / voice-assisted speaker market. The HomePod didn't resonate with customers, especially when compared to the success of Amazon and Google speakers. Now, the question is, does Apple want a bigger piece of the pie? If it does, it could essentially double its market share by acquiring Sonos. Because of recent events, many of us find ourselves at home listening to more music and podcasts, and for some, bringing the theater experience in-house by upgrading their home audio systems. This has caused a holiday-like demand for Sonos products and have all their newest products, the Arc, Sub, 5, and Move, on back order ever since they were released in early Q2. And now, part 5, buy or wait. In my opinion, if you've done your due diligence, trust in the long-term vision of a company, and, of course, believe you're purchasing it at a fair value, then there's zero reason to wait or attempt to time the market. Remember, time in the market beats timing the market. So I've slowly started to add shares to my portfolio, and I'm currently at 242 shares with an average cost of $16.47. I'm hoping the price dips so I can scoop up more shares at a discount. So guys, that's the video. Thanks so much for watching my first stock analysis video. And if you enjoyed it and want to see more, please hit the thumbs up, subscribe, and let me know in the comments what you enjoyed, what you didn't enjoy, or any of your other thoughts. I'll catch you in the next video.